Okay, so in this video, I'm going to explain about purchase ledger, control accounts. So going by the same principles of sales ledger, control account, explained earlier. So I want you to think of the purchase ledger, control account as like a liability account. So this is actually a trade payable control account, which summarizes all the transactions representing the individual supplier's account in the purchases ledger. Okay, so it's for the same purpose as explained for the sales ledger control account. The purpose of purchase ledger control account is to check the arithmetical accuracy of the total balances in the purchase ledger control account. Sorry, in the purchase ledger account. It also provides us with a quick check on the totals of what we owe the trade payables. Okay, and also it serves a purpose to locate any errors possible. So a purchase ledger control account, otherwise known as a trade payable account, is a summary of all the individual transactions totaled up, extracted from the purchase ledger. Okay. Ideally, the purchase ledger control account total should show the same balance as the purchase ledger account balance. So the concepts are the same. So whatever you see here, entries on the credit side means we owe the trade payables more. Entries on the debit side means we owe the trade payables lesser. So to start off, you can have opening balances picked up from the general journal. Okay, so the opening balances here are naturally a credit balance, but however, there may be some debit balances due to the business being overpaid to their trade payables. Okay, so and then we have the credit purchases on the credit side. So this figure comes from the total of the purchase day book, otherwise known as the purchase journal. Okay, and then we might have refunds from suppliers. So this means we received payments from suppliers after we have settled them in full. So we would have debited the cash book, hence we need to credit here. Okay. And then this one is sometimes the business would have paid their suppliers late. So hence the suppliers charge the business interest. So which means we owe the suppliers more. So the double entry for that is to debit interest expense and to credit the trade payable. So yeah. Okay, now moving on to the debit side, we have total good returns. So these are purchases returns, which we should extract from the total of the purchase return journal. Okay, and then whatever money paid, either in cash or check form to suppliers, we need to total them up. These figures are taken from the credit side of the cash book. We need to total them up, and we put the totals here on the debit side. Okay, and then also from the credit side of the cash book, we need to record the total discount received, which appears in the discount received column on the credit side of the cash book. Okay, and then this one refers to contra. So if you recall what I thought earlier, the double entry for contra is to credit the sales ledger control and to debit the purchase ledger control. So remember, contra is always a deduction. Okay, so when you come to the end of the month, this figure here is obtained by merely balancing up the account. So if it's a credit balance, this is the balance carried down. We need to put it on the debit side and not forgetting to bring down the balance over to the credit side. So on the other hand, if we have a debit balance at the end of the month, this is the balance carried down. We need to record it on the credit side and bring it back down to the debit side. Okay, so here's an example of a question. So from this question, all we need to do is to put down these amounts on the correct side of the purchase ledger control account. So let's start with the opening balance. Okay, so the opening balance should be placed on the credit side. Okay, unless indicated that it's a debit balance. If nothing is indicated, then we usually place it on the credit side. Okay, now checks paid to suppliers. If you recall the format, when we pay to suppliers, so we should record it on the debit side. Now, although here is mentioned as cash, but it covers cash and checks. So, debit side. Alright, so next we have return outwards, also known as purchases return. So that should be placed on the debit side as well, as per the format. Okay, credit purchases in January. This should be placed on the credit side. Right, and then coming to the end of the month, so they mentioned that this is a credit balance, so the balance carried down should be placed on the debit side and brought down to the credit side. Okay, so this is how you work a purchase ledger control account. So as I mentioned earlier, sometimes you can have debit balances in the purchase ledger control or purchase ledger because the business has overpaid their trade payables. So that's why. Okay, and for the same reason mentioned in the lecture on sales ledger control, contra is where we set off the amounts that the same individual owes us and we owe that individual. So we pick the lower between the two amounts. So this is the same example that I'm using as the previous lecture on sales ledger control. So in Rodney's books, Ernie has a debit balance of 100 in the sales ledger and a credit balance of 300 in the purchases ledger. So the lower between these figures is 30. So since we are working a purchase ledger control account now, so we should place the contra on the debit side. So remember, contra is always a deduction. So if you're recording it on the purchase ledger control, it is always on the debit side. If you're recording it in the sales ledger control, it is always on the credit side. Okay, so advantages of using control accounts, it can help us to detect errors, it can help us to minimize frauds, right? It can help us to know what is the total amount that we owe our trade payables, and it can be used as a check of the arithmetical accuracy of the postings. Okay, however, control accounts has its limitations, so not all errors can be revealed by merely preparing a control account. So these kinds of errors may not be revealed because they can happen within the ledger account. Error of compensation, error of omission, error of commission, error of original entry, and reversal errors. So that's all of this lecture.